Ben ritrovati giovedì mattina su Flood New York Stock Exchange. In questo momento indici in territorio negativo. Ne parliamo con il mio ospite qui su floor, come vedete Derek Orth, che è designated market maker per Brendan e Cryan Company. Derek, thank you so much for being with us.
Pleasure, thank you.
So Derek, I was just saying that we are down today. We are sort of like losing almost 1%. For the S&P 500 is the first day down in 3 sessions. Technically, anything has changed?
Well, right now we're just having our pullbacks down to areas of, let's say, technical support. In the S&P 500, I'm looking at the 1820 to 1815 range. Reason why we're looking at that as a support zone is because that is basically, the 1850 range is basically your breakout level where those were the highs of, let's say, mid to late November to, through mid-December. We kind of were flirting with that zone for a while, and we finally broke through in December and made all-time highs. So now we're kind of pulling back again to that and seeing if that acts as support on the pullback, and that's what we're looking at right now.
So basically, of course, now we are all following the earnings season, and we have seen certain shares actually impacting on indexes. The example is IBM yesterday on the Dow Jones. So do you think that we might see a lot of volatility in the next few days, in the next few weeks, until we have more clarity on how the corporate America is doing?
Yeah, earnings season, you're going to get volatility because some certain components of indexes will have influence over, of the indices, and that was a good example yesterday. But we'll watch for that, and it was interesting enough yesterday. The market, the Dow was down, but other indices were up, as the Nasdaq in particular was up, and
it's sort of unusual. Yeah, it doesn't happen in a long time to see such a net difference.
You're going to see that during earnings season because one component can make that's heavily weighted, and one index can have that influence. So you kind of see that during earnings season usually, if at all. And we're going to, for the Nasdaq, we're looking right now at the 40. I'm looking at 4190, 4187. Again, that's an area where we kind of have a support zone. Let's see if we kind of get down to that. We kind of broke underneath 4,200 briefly. We're at 4,204 right now. So we're going to kind of see where that holds up. And the transports were strong earlier this morning, and right now they're still a little bit on the upside here. And that could be again a component of the transports that's acting really well relative to the rest of the market. So it's kind of influencing it right now. So yesterday you kind of had a Dow down, but the comp up. Today you have the down, but the transit's up. So, it's what's going to happen during earnings season. You're going to get these mixed signals. But, when you look at the charts, you want to kind of see where your support zones are during this time, the fluctuations, and see how they react when they get down there.
Yeah. So which numbers are you looking at?
Well, all right, so the S&P we talked about, 1815 is support. I'm looking at the transports. I'd say it's a little bit, we're well above and elevated above support right there. I'm looking at all the way down at 74.10 as an area just to kind of get started for an area of trend line support. For the S&P, not the S&P, the semiconductors, the Philadelphia Semiconductor Index, which has been acting really well through this whole upward move in the market. I'm looking again at 535 to 525 as an area of support and see if we hold. If we pull back, again, that's an area where trend line support is lying right now. And for safe haven stuff right now, we're looking at gold is acting better than everything else because it's acting as a safe haven today. But gold's trading up $22 right now. Kind of have some resistance around 1267 to 1270. That was a reaction low back in October that now you're kind of trying to back test up and see if that acts as support here. But if we can get through that choppiness there and on a closing basis for a few days in gold, potentially we can keep on the rally going and maybe get back into the 1300 handle. If the market does, let's say, break down, you might see that transpire. If those support levels we talk about in the S&P 500 doesn't hold, then maybe people might fly to, for safety in gold, and that might be something to see. But that's basically where we're looking right now.
And so the month of January is almost over, and we can consider a quiet beginning of the year. A lot of people are forecasting, though, a weak first quarter. So for February and March, we might expect some increase of volatility of profit taking.
Yeah, and I think that's what you got to watch for. You got to watch for those support zones, and if they start breaking, you might see some of that profit taking again, and then we could finally, we've been saying this for a couple of sessions I've been on, that putting on that Fibonacci grid retracement for those bigger pullbacks that might be coming. And again, right now the trend is still up because trend line support hasn't broken.
For how long, it can really, we can really say it's not happening, and then sooner or later.
Well, that's the thing. That's the but that's why you kind of want to see what happens at support zones, because you don't want to be leave. The hardest thing to do is let your profits run, right? You don't want to jump. You want to. That's why you want to look at these back chest support areas to see, all right, what's the market going to do here? Right now, the market's still trending higher, so you want to just watch those zones. I'm sure there's a lot of orders resting at those levels that might be, influence a downward move, like stop orders or whatnot. But we'll have to see. And I think what the basis of it is that you just kind of have to keep an eye on that, keep an eye on those levels. And first hour trading here, we kind of settled a little bit. The S&P starting to bounce a little bit, and we're just kind of flat here. We're down 150 in the Dow, and we're just basically sitting at down 150, down 160, and the 16,215 level is so far it's holding there. So. These are spots where you just want to look and kind of see how it goes.
Yeah, let's go through this earnings season, and then we'll see, basically.
Yeah, I think that's the big thing. We'll get to earnings season, and we'll see, what analysts or what changes they might make in their predictions, and see how that influences the prices, and then we could kind of reevaluate. And if the trend does break down, we could kind of put some measured moves on, where our price targets are for the downward move if and when it does start. But 150 right now, we're not down one. We're not down. It's basically 1%. This is your percentages that you always say. It's all based on percentages. Where the indexes are priced very high, obviously. So 1%. Okay, it's 150. You think in the back of your mind it's a lot, but it's only 1%.
It's not a huge movement.
No, not yet. No.
Not anymore.
No.
Let's see. Thank you very much, Derek, for being with us.
Thank you again for having me.
E grazie a voi per l'attenzione. A domani.